how do you know you're out of the woods? You're out of the woods when there are sufficient masses of people who are holding Bitcoin across varying strata of society that you just can't arrest them all. Poor folks, middle class folks, rich folks, institutionals, governments, everyone is a Bitcoin holder at this point. Logically, if you want to attack Bitcoin, you're attacking your entire society. And that's a great defense mechanism for Bitcoin itself.
Hello, everybody. Tyler Rowe here with the BitcoinTreasuries.net podcast. We throw around the term OG pretty loosely in Bitcoin circles, but my guest today is Jeff Garzik, and he's the real thing. He famously worked with Satoshi as one of the early developers of Bitcoin's core software. So welcome to the show today, Jeff.
Thanks for having me, Tyler.
You got it. So kick us off, Jeff. Take us back in time. I've heard you say before that you thought decentralized money was kind of inevitable as far back as in the 90s. We just didn't have the software necessarily to deploy it yet. So fast forward to those early days of Bitcoin when you heard about it. What did you think Bitcoin was when you first encountered it? And what did you think it could become?
Like you hinted at, I had been waiting for decentralized currency for decades. Being a science fiction nerd, a computer nerd, it was foretold by our sci-fi authors that there would be a decentralized currency. You could just walk up to someone and hand them, and this is a sci-fi term, hand them a cred stick. And that would be transferring $1, $100, $1 million. And it doesn't matter. It's not a stack of paper money. It's just digital. And it's decentralized. You don't have to walk into a bank, ask a third party, can I have my money just to give my money to this person? So that idea had been in the air for decades, and I was literally waiting for it. I was watching Liberty Reserve and Hashcash and a lot of these names that are pre-Bitcoin, and got involved in several of those, but they all had a centralized counterparty. There was always one database server in someone's server closet somewhere that could be subpoenaed by a particular jurisdiction. So that was the default state in 2010 when I saw a post on a website slash.org whose tagline was News for Nerds, and it described Bitcoin, the decentralized currency. And I approached this skeptically. I thought in my computer science hubris, oh, surely this is just 5 servers in an Amazon data center somewhere. Surely it's just got a single administrator and a single off button, and it's has all the vulnerabilities of the other systems that I just mentioned and more. And I was wrong, pleasantly wrong. I downloaded the software. It was open source, which to my engineer's eyes and brain, that means you can open the car and look under the hood. You can inspect every detail of the system, and you don't have to rely on someone else's CV, someone else's resume, someone else's credentials saying, yes, Bitcoin's decentralized. The first of us, the first Bitcoin core developers like myself, we just looked at Bitcoin ourselves and came to our own conclusions that, yes, this is new, unique, decentralized, and it's something that, and I'll explain what I mean in a second, is something that the world's seen before, but what the world has never seen before. And what I mean by that is Satoshi was brilliant. Satoshi took off the library shelves very well proven cryptographic algorithms that have been studied, that have been cryptanalyzed, SHA 256, ECDSA, these other technologies that Bitcoin was built on, and he combined it in an absolutely new and amazing way that was truly decentralized. It disproved all my skepticism. And so just like I had done with open source and the Linux kernel in my then current career, I started submitting patches, changes to the Bitcoin code base, directly emailing Satoshi, hey, do you want to make this change? And to my pleasant surprise, he accepted several of those changes. So there's no formal application form to how to become a Bitcoin Core developer. You just dive in and start making changes.
It's official. The Bitcoin Treasury's conference lineup just dropped. Grant Cardone, Adam Back, Eric Weiss, the man who introduced Sailor to Bitcoin in the first place. Plus, the CEOs actually running the Treasury companies and the macro voices calling out where the institutional capital goes next. 10 confirmed speakers, one closed door room, September 28th in New York at Second. Save 10% on tickets today by using the code SECOND. Reserve your seat by scanning the QR code on the screen or visit bitcointreasuries.net/conference. We'll see you in New York. Wow, that's a really cool story. I wonder, thinking back to Bitcoin's origin, and you came in, probably a year and a half, 2 years after Satoshi released the white paper to the world. What was more important is that Satoshi, brought this, monetary system, this core software and the token on top of it in a way that had never been done before, that was truly decentralized, open source? Or was there something special about the timing of when the Bitcoin white paper was released to the world? We had been through the dot-com boom and came on the other side of the internet being, widely adopted for the masses. And it was kind of on the crest of the great financial crisis. Was that important to Bitcoin's story in your mind?
Well, I'd look at the evidence, look at the data, and maybe this is shocking, but I'd say no. And what I mean by that is in July of 2010, when I first found Bitcoin from that slash.org post, I call it the Great Slashdotting because Jed McCaleb of Mt. Gox fame, several other Bitcoin developers, several of the early Bitcoin enthusiasts, we all found it from this one slash.org post. And that was really when Bitcoin's ascent went from a few people to a lot, and it started growing first logarithmically, then exponentially, and it was exposure. And as you mentioned, that was a year and a half or so after the Bitcoin white paper had been published. At that point, Satoshi had been mining all of 2009 basically by himself. Yeah, there were a couple other folks that did a couple transactions in 2009, but it was really a silent network and not a lot of people participating or listening or reading the white paper at all. In May of 2010, a little bit before July when I get involved, that was when Gavin Andreessen, who quickly became Bitcoin developer number two, found Bitcoin, and that kind of started the ascent of Bitcoin. And again, it really hit a crest with July 2010 and the slash dotting. So it wasn't really the white paper at all. The white paper, the initial emails to the P2P mailing list, they hit a couple core enthusiasts. The P2P mailing list famously has some discussions of Bitcoin that were largely skeptical, except for Hal Finney and one or two other participants. But it was just discussed in tiny, scattered academic circles for well over a year. And so the white paper was kind of the great undiscovered country for the longest time. So I think it might have stayed a white paper if, and this is what Satoshi said to me on the forums in the early days. Satoshi said, I had to write Bitcoin to prove to myself that it would work. And so Satoshi had the white paper, had the ideas, developed it, but the proof is in the pudding, and the proof is launching this thing. It doesn't die, it survives, it thrives, it grows. And so I think it had to be released to the wild, and it would have been another white paper among dozens or thousands of eCash, Hashcash type white papers, just purely speculation, except for the implementation. And that was what made all the difference in the world. And I really like that ethos. It was similar to the Linux kernel ethos open source that I came from is the words are just words. Source code, operating, running, testable source code is the proof in the pudding. And so the market, I think, had to prove to a certain extent that Bitcoin was real before the white paper could be determined to be real. And so it kind of happened in that order. People, I think, didn't adopt it theoretically and academically. They used it, it worked, and then they read the white paper and thought, oh, this is a work of genius.
Oh, that's brilliant. You're catching me up to speed on a lot of history that, I've either glazed over or never heard before. And we'll have to bring the Great Slashdotting back into the current Bitcoin lexicon to make sure, everyone understands the importance of that. It must have been a really cool time, just being a part of that. How exciting was, finding Bitcoin at the same time of all these, early OGs?
Oh, well, we didn't know we were OGs at the time, right? It was just we all found a new amazing project that we could all talk about with each other. It was very much a crypto libertarian, crypto anarchist kind of fringe, monetary yet political kind of technology. And so you really had the kind of a triangle of monetarists were interested in it, technologists like myself were interested in it, and the philosopher political types were interested in it, all for differing motivations and reasons. But again, we all came together with the same technology, initially the same forums. Little tiny bit of trivia. The official Bitcoin forum used to be forum.bitcoin.org. And I bought the domain bitcointalk.org and moved that over to a different domain. And so the forums live on and are called Bitcoin Talk. And you can scroll back to the original Satoshi writings from 2010 and all the debates back then. And to your question, it was just an energy of excitement. And, this was really and truly a new and different type of money, of the type that, at least in the United States, in terms of monetary history, you hadn't had a real private money since 1800s. And these tiny community banks in Nevada and Idaho and Ohio in the United States were experimenting with bank specific money, as in one branch of one bank would issue their own dollars. And so the US had a history of private money, which I think helped not only philosophically, but legally, the growth of Bitcoin and interest in Bitcoin. So there was a lot of excitement. It was a new monetary experiment. It was new and different. A lot of the discussions were about, my words, about the man, meaning that would the dollar system just look at Bitcoin as a competitor and decide to crush it? Would the euro, which was at that point a younger monetary experiment where they were consolidating the European history. They fought with each other for hundreds and hundreds of years. And the euro, monetarily speaking, was this great unifying moment. And in 2010, that was young. European countries were still changing from like the franc to the euro. And so, would the Euro folks see Bitcoin as an existential competitor and have to kill Bitcoin? So it was excitement, but also tempered with, this is so amazing, this is so great, that surely some big shadowy force out in the world is going to step in and crush Bitcoin at any moment, because it's in its infancy. It's easy to crush right now before it gets established, et cetera. Now in 2026, as we talk, obviously that did not happen, and it was embraced in fits and starts per jurisdiction around the world. Japan was actually a leading country to declare Bitcoin a currency. That was early and radical, compared with several other Western countries. Some of the more authoritarian countries banned it to no effect. China and Russia it may still be true, officially have laws on the books to say anything other than a ruble is not currency and is not illegal. Anything other than the renminbi, not currency, and therefore illegal. But you've got plenty of people in Russia and China using Bitcoin just like everywhere else. But that was the excitement of the early days. It was, this is new. This is literally the first major monetary experiment that we've seen since going off the gold standard. It was that big, if not bigger. And that was the excitement in the room at the time. So it was so much excitement that we tried to temper it with worries about the man.
Yeah. Yeah. No, it's interesting. That I came to Bitcoin. Also, because of my political sensibilities, it appealed to that, I guess that libertarian streak that I have. And basically, Jeff, if I'm mischaracterizing your position, you're saying we're basically out of the woods, right? Is the man's not going to crush Bitcoin. Obviously, we can't see exactly the future, but there's been a lot of really great steps that have been taken where governments around the world are taking a I would say dovish position toward Bitcoin. It's allowed to operate. We've seen Wall Street. We cover this every day here at Bitcoin Treasuries. We see Wall Street embracing Bitcoin as a potential store of value. Companies adopting it left and right and adding it to their balance sheet. So I mean, it's a great time to be alive. And if you had asked me even 6 years ago, would we be in this spot today where Bitcoin is just being adopted at the rate it is? I'd say I don't know. But like, yeah, is that your position? Is that we're pretty much out of the woods as far as governments trying to quash Bitcoin, and where does Bitcoin go from here?
Well, the short answer is yes. Is those fears of just big blanket Bitcoin ban are pretty much completely gone, and even to the point where your governments in legislation are using Bitcoin and, in some smaller sense, Ethereum as examples of decentralized money. When they regulate other tokens, the newer tokens on Solana, Ethereum, all that stuff, MiCA in the EU, for example, looks at tokens and says, are they decentralized and not in control of any one person, any one government, any one company? And if yes, you're in one category. Otherwise, you're in another category. And so it's sufficiently to the point that Bitcoin is being used by government in regulation as a litmus test for is something decentralized. And so I think that's a great anecdote or data point for that acceptance. All over the world, I can do an A/B test of 2010 versus today. And in 2010, we worried about in the US, are we violating the Stamp Act? This is just some obscure, not even directly related to money legislation that some, I won't say paranoid, but lawyers as a breed, they're overly cautious, very risk averse. And some pro Bitcoin lawyers would worry about, are we violating the Stamp Act? And, obviously, no, we're not. You've got Wall Street firms, institutions embracing Bitcoin, holding Bitcoin on its balance sheet. Riffing on your podcast's title, we've got Bitcoin treasury companies, publicly listed, holding Bitcoin in their treasury. And as a developer, again, going back in history in 2010, we would say, we might, again, we're not, we might be violating the Stamp Act or something like this. Therefore, there was a real thought, a risk of, are you an open source developer? Are you minting money as an open source developer? And are you putting yourself in law enforcement crosshairs as an open source developer? That was the real, honest to God thinking and risk in those early days. And how do you know you're out of the woods? And this, again, gets to the yes answer to your question, is that you're out of the woods when there are sufficient masses of people who are holding Bitcoin across varying strata of society that you just can't arrest them all. It's at some point enough people hold gold that you can't ban gold because gold is just everywhere, and you'll have to, go house to house confiscating gold. The same argument goes with Bitcoin. You've got poor folks, middle class folks, rich folks, institutionals, governments. Everyone is a Bitcoin holder at this point. You can't say, one of those classes is not a holder of Bitcoin. And so logically, if you want to attack Bitcoin, you're attacking your entire society. And that's a great defense mechanism for Bitcoin itself. And that was the level that we'd always hoped Bitcoin would achieve. And so unquestionable success in terms of, it's here. If you're like a high school prom king voting what crypto is most likely to succeed, most likely to live another 20 years, your vote's got to be Bitcoin, Bitcoin all day long. It's got regulatory clarity in more countries than any other crypto and almost any other currency. So that's pretty amazing. All of these go to the contra of will Bitcoin be banned, and all of those are data points with a strong no. So that's what we've been looking for as Bitcoin developers from the earliest days. Are these signals of Bitcoin is spread out throughout all stratas of society. And so if someone attacks Bitcoin, you're attacking everyone. And that's the level of success that we always wanted Bitcoin to achieve, and it's there. It's no question about it.
Yeah, I love that take, Jeff. You mentioned something that's a little thread I want to pull on because I've heard you talk in the past about because crypto is open source, because Bitcoin's open source, the cost of creating new coins, new tokens is basically zero. Has that been important in the development of Bitcoin and the broader crypto ecosystem? Is that if we're going to really be freedom money, if we're going to have open source money, that also means there's going to be a million projects out there, and to get us to the point we're at, if Bitcoin is going to be better money in the future, and it's also trending towards, I would say, ossification, or less programmability, and we'll get into what Hemi does as part of this. But was that a necessity that there were a lot of imitators to Bitcoin?
I don't know about necessity, but I'll choose a close word is inevitability. Is if you have openness, and we want openness, and if you don't restrict competition, and not that we could, but you wouldn't want to restrict competition, then competing on the wild west of the entire world's monetary system, the world's most complex system is the world, or as Linus Torvalds used to say, the greatest test lab in the world is the internet. That is where Bitcoin, competed head to head with new currencies, with old currencies. And it's absolutely inevitable that new currencies would arrive. They arrived within days of the Bitcoin source code being posted. In the early days, it was pretty absurd the level of effort you had to put into to launch a new currency. You had to launch an entire mining network to launch Litecoin or Dogecoin or some of those early Generation 1 coins versus today, where it's just a new smart contract on a blockchain. But it's inevitable that people are going to create new coins, and you need that, what I call the Darwinian trial by fire of the greatest test lab in the world, the real world, punishing these currencies, stress testing these currencies, and what comes out the end is the strongest, the best, the most highest quality. And again, that's Bitcoin. It has the highest survivability, the highest longevity, the highest hash rate strength, the highest institutional support. There are so many other metrics that Bitcoin is almost a one of one at the top. And what these other currencies and I'm speaking as a purveyor of the Hemi token and others, is you had to have that level of openness, that level of innovation, and that freedom to, as we always said in the earliest Bitcoin days, go off and run an experiment. And if that experiment is great, Let's incorporate that technology back into Bitcoin if it makes sense. Or let's use that to create a Bitcoin adjacent technology to embellish and support Bitcoin. And you know, selfishly, that's what we did with Hemi specifically. So you needed those coins. It was inevitable. Some absurd numbers that I hear from other networks, like Solana creates 60,000 tokens a day, new tokens. Um, that's where the supply of digital assets is infinite. Quote came from. It's really talking about the supply and demand of tokens, of blockchain networks, of individual currencies, such that you can only have so much capital going into so many of these things. And so, if you have a near infinite supply and the cost of creation is zero, then most of the value is going to be zero of these tokens. That's just supply and demand. But on the other side of the supply and demand curve, the very, very, very few that have staying power, have quality, have an audience, have holders, have continual investment, not only in the core network, which for Bitcoin is a bit ossified, but the surrounding network, the financial products, the derivatives, the ETFs that hold and move these stuff, those are still being built out. That second layer of financial infrastructure is still being built out. So it's inevitable that 99% of digital assets are going to go to zero, and that's not cheerleading or calling everything a poop coin. That's just natural supply and demand if the cost of digital asset creation is zero. But it's great that the cost of digital asset creation is zero. It's great that we have permissionless innovation. All of these things are positive that a university student in the US or elsewhere can create their own digital currency and experiment with economics in a way that I never could in the early 1990s when I was in university. So having these tools available for anyone with a great idea to compete is the best for users, and it's going to produce the best outcome for users. It might not produce the best outcome for, the investor in this coin or that coin or that coin, but what comes out of the end of that, again, it's either a winner or it's not. And if it's a winner, everybody benefits. So we love open source. We love permissionless innovation. All tides rise when you have that kind of scenario.
Yeah, it's like it's great that we have freedom, and the internet's been such an unlock for freedom. Is people have been able to innovate, and sometimes we forget, with freedom, sometimes that price is responsibility, right? So, just thinking about, like you said, there's traditional finance derivatives built around Bitcoin. There's a lot of programming that's happening on top of Bitcoin, around Bitcoin, to help it be the money that it can be. Like you said, the core software, the base layer is relatively ossified. So you've got the ETFs, you've got Bitcoin Treasury companies that are a pipeline, a derivative, if you will, of Bitcoin. You've got the Lightning Network, which is focused on building cheap and fast payments as an L2 on Bitcoin. You've got, and I'm venturing into territory where I'm going to have to learn in real time here. So, treat me like I'm five, as you can correct anything I say. You've got some side chains along, traditional side chains that create a separate blockchain for smart contracts. They require sometimes a centralized bridge, and then you've got Hemi, which is the project that you started, that links Bitcoin security to other parts of the crypto ecosystem in a way that's verifiable on Bitcoin's blockchain. So can you give me, I guess, like the high level view of what Hemi is, and then maybe we can dig into some of the dynamics around it?
Sure, absolutely. So Hemi is an L2 blockchain that is secured by the Bitcoin chain and fully compatible with existing EVM smart contracts. So that's a bit of a technical explanation. Me being a developer, that means for most people that it's a quicker, faster, cheaper, and you can still move Bitcoin on and off Bitcoin L1 with standard network fees, et cetera. But this adds new DeFi dynamics to the your Bitcoin that's coming off the Bitcoin L1. You can park it in smart contracts, program it. You can move it across bridges, which are not just centralized bridges. They're again Bitcoin secured and based on Bitcoin confirmations. So it's all about how do we take and translate Bitcoin security and Bitcoin the token into a much more programmable ecosystem, while at the same time not giving up on that security, that finality that we like.
As you say that, I think there's probably like a subset of Bitcoiners, Bitcoin maximalists, who probably like shudder at the word programmability. Why is that important to you for Bitcoin to succeed? As the best monetary network. Why is programmability important over and above, someone who's just self custodying Bitcoin and thinks, that Bitcoin can still be money for the world if everyone holds Bitcoin in self custody?
I'll answer the question this way. A little bit of trivia that some Bitcoin folks might not know. As I like to say, every Bitcoin comes with strings attached. And what that means is every single Bitcoin transaction includes a little string of programmability, a little script attached to it that describes specifically the monetary rules of how it is to be spent further. When you send some Bitcoin to me, you attach a little programmable script that says Jeff and his Bitcoin address can sign and move this Bitcoin. And it's that simple in the simplest case of a person to person, Bitcoin to Bitcoin transfer. But at its fundamental level, all Bitcoin has been programmable from day one. And that has been, number one, the foundation of its security, so that it's based on public private key, digital signature type technology. So it's been, more secure than the traditional Swift network money messages for its entire existence. Going beyond just the simple, this person can spend this Bitcoin type programmability, you can get into layers of autonomy, layers of additional security. There's another anecdote, a very large financial firm in the United States that secures their Bitcoin. They have red, green, and blue teams that are physically separated in different offices of this financial firm, geographically separated. And each one of those has their own set of digital keys. And if and only if, the red and green team or the green and blue team agree, and that's a 2 of 3 multisig, then and only then can high security, high value type transactions unlock and occur. And this firm goes very far into security. It's not just multi-sig. These keys are stored in SCIFs, secure. Uh, I'm forgetting the acronym, but secure facility. It's a secure room inside a secure room with a computer that's not connected to the internet. And so you got to go through physical security with guards and that sort just to get into the computer that can do these multi-sig type transactions. And programmability is the thing that made that happen. You didn't have to create a weird special database that, in an alternate world without Bitcoin that replicates that physical security that I just described. It's endemic in Bitcoin's core consensus protocol itself. And so you can do much more complex things. You can do, and a lot of the stuff we talked about in 2010, no one has even built this yet. There are fancy like P2P bond markets that we envisaged. And you could have Bitcoin derived financial instruments that are on the Bitcoin chain are now on the Hemi chain. that unlock based on certain conditions that either economic or key turn programmatic that occur. So it's very much autonomous, the neutral referee type operations where I use neutral referee very intentionally. At the end of the day, there's no supervisor for your transaction. It's the Bitcoin protocol itself. And the Bitcoin protocol doesn't know that I'm, a white guy or a white woman or a black guy or an Asian woman or, left or right politically or this religion or that religion. It is totally neutral across all of the cultural, societal, socioeconomic factors. It's just about the programmability of that Bitcoin. And that's the most neutral monetary authority that you could ever want. And so programmability opens so many doors that reduce the level of in person, in the real world security that you have to have because you offload a lot of that security onto Bitcoin itself. Another example is social recovery, those same Bitcoin rules that allow two of three multi party type signatures. You can also create a scenario where I lose all my keys completely, go digital disaster. And if I've set up beforehand social recovery where multiple of my friends can say, oh, Jeff lost all his keys and they signed to that, then the Bitcoin itself could be recovered. That's another aspect of programmability. So I honestly could talk for an hour just on programmability itself. It enables decentralized financial products without centralized leadership. It enables decentralized trading or triggers based on if X hits this level, then Bitcoin is unlocked or something like that. And those type of things, they're fundamentally financial products, just like Wall Street has. But again, you're not relying on Bernie Madoff and a single computer in a closet that Bernie is secretly corrupting. You're entirely leaning on the consensus protocol, which is, again, the most neutral referee in the world. And you can build layers of rules that create truly egalitarian, truly free systems for people to use. And so at the end of the day, a lot of us are motivated by, just very simple philosophical beliefs like human freedom, payment freedom, the ability to access open networks anywhere in the world. And the programmability allows you to not only A, do that, but B, build ancillary systems on top of that that also provide similar levels of censorship resistance and freedom.
That's really cool. I probably could sit back and listen to you talk about programmability for about an hour, Jeff, but we won't indulge that much. And part of the beauty is, people are going to use Hemi and they're going to use like similar protocols to build things that you probably haven't even conceived of, right? And that's the beauty is that with programmability, people can solve problems as they come up that maybe the Bitcoin blockchain itself isn't set up to solve in real time. So I'm curious. We're talking to a Bitcoin Treasury company audience. There's people who follow the leveraged kind of Bitcoin balance sheet plays like Strategy and Strive, and companies like that are running. Of course, there's companies out there like Coinbase who's in the ecosystem that also have, or Block, who have a Bitcoin treasury as part of their strategy. Bullish comes to mind there. So there's people doing a lot of different things with Bitcoin on their balance sheet. You've got Figma is a company that went public in the last year or two, and they had exposure to the Bitcoin ETF. So we're seeing more and more adoption as companies have been putting Bitcoin on their balance sheets. I think it's happened at a pace I really didn't expect. And it's happened differently than I suppose I expected. I thought we might see some more like Mag 7 companies do what Tesla did and add maybe a little bit of Bitcoin here and there before we saw this evolution into the leverage Bitcoin ecosystem. But are there any things that companies aren't doing right now that you expect them to do? Do you think they're leaving money on the table by not earning a yield on their Bitcoin or putting their Bitcoin to work in different ways. I'm curious of your take of the lay of the land with how this has played out over the last couple of years.
Again, short answer is yes, definitely leaving money on the table. And selfishly, Bitcoin and Hemi specifically will help with that. Earning yield on your Bitcoin is something that everyone should be doing. It happens in fits and starts. I try to think about the slowness of enterprise. And so if we unroll history, maybe 8 years ago, 7 years ago or so, strategy wasn't really even possible. Strategy was possible thanks to some FASB accounting rules that were recently changed. And so you came out of the Gary Gensler era of the SEC. It was very just literally anti anything crypto. And they were prosecuting companies, subpoenaing companies, doing everything they could to kill the crypto wave in the United States. Thankfully, that environment has changed. And so the pace at which it happened was really uh, governed by external forces, I think. There was the traditional FASB rules, which kept Bitcoin off the balance sheet. They were just totally nonsensical. If Bitcoin goes up, you'd book it one way. If Bitcoin goes back down, you're kind of stuck. And that was just it made no sense from an accounting perspective. And that simple rule that enabled strategy and the other strategy companies, it was just logical sense. It was just waiting for the political winds to change. So the rubber band snapped back as soon as the Gary Gensler SEC era was over. That unleashed a lot of American and European crypto with regards to strategy companies. You have publicly listed strategy companies not only with in the United States but Canada, EU, even the Warsaw stock market has a Bitcoin publicly listed strategy company over in Poland, and that's Garzik is Poland, so that's the home country. So ultimately, it was driven by regulatory, and the pace was really that rubber banding back of okay, the FASB gates are now open. And so there was, as Wall Street always does, there was a flood of Bitcoin treasury companies, and I think now there's the second layer of Wall Street doing what Wall Street does, meaning that you got the ETFs, you got the BATs. Now what's that second layer? It's like the leveraged ETFs. It's the indexes that aggregate together, and then you trade that index. The options, the futures on each of those individual plays. Full disclosure, I did some trading of options of strategy quite a bit in months past. So that was a lot of fun. And all of those ancillary products, again, that was kind of there was the great slash dotting, there was the great FASBing, or the de-Genslering that kicked off a lot of these things. But to your point, they've all just, in my view, just made the first step of many steps. Is that okay? You've now got Bitcoin on your balance sheet. And what does that mean to a responsible Fortune 500 institution? That means the C word, custody, is you've got legal custody and technological custody sorted out for your Bitcoin. If you're holding billions of Bitcoin, it's not on a single ledger hardware wallet. It's not on a browser MetaMask wallet. Again, you've got multi-sig, multi-part keys, a lot of this high security stuff. That just had to happen as normal for institutions to start digesting billions of Bitcoins. And so we're there, check the box. We've made it to that point. Okay, now what? The next step is part again mentioned the ancillary products, the the 2x leverage micro strategies, or 2x leverage Bitcoin ETF trades and stuff. But yield, all of that Bitcoin is just sitting there earning zero yield. And that's obviously money on the table that every single private Bitcoin holder, every single institutional holder, every single ETF, Bitcoin treasury company, all of those can take advantage of that. And the rates are not amazing. The rates on volatile currencies, cryptocurrencies, BTC and ETH, they tend to be in the single digits, usually below 5%, but still earning 1 to 2% on BTC is money that's left on the table if you're earning zero yield. So I think yield is that second or third step after custody, after the initial second layer of Wall Street products. All of them are leaving money on the table in terms of yield.
Yield is yield, right? And yeah, I do think we're going to see a step toward that. It's interesting because a lot of the like Ethereum digital asset companies, it's Ethereum staking is native to that blockchain. So those companies are engaging it, and it'll be interesting to see. And I do think we're going to see a lot of Bitcoin treasury companies, turn to find some ways, and hopefully you're having those conversations, Jeff, and we can talk about that more in the future. I do have a question about, well, actually first, like, a message to Bitcoiners or people who follow the space is like, this is what Bitcoin winning looks like. And I think you're like painting that picture really well. I think, freedom movements, Bitcoiners too, specifically, sometimes we could be self-loathing, or maybe even a bit like, maybe masochistic. Maybe that's not the right word, but it's like we weren't winning for such a long time. I would say before the de-Genslerification, as you said. But it's like now that we're winning, it's hard for us to like celebrate that and recognize that that's the case. In that context, we have seen. You're of course like a decentralization purist or someone who really values that, but you're also building institutional infrastructure, Jeff. So as you've seen more coins kind of consolidate under, like the ETFs, specifically, the IBIT BlackRock ETF, you've seen Strategy, who they're on a race basically to accumulate 1 million Bitcoin. Does the centralization of the Bitcoin stacks in that way worry you in any way? Or is that the natural evolution of a free and open asset?
Oh, it's a good question, and I honestly don't think there's a right answer, or the good answer, I would say, is that the world naturally has concentrations if freedom is allowed. And so, do you really want to, to present a contra example, do you really want to create a system that humans play a role in picking who has and doesn't have Bitcoin? To create an absurd example. And so, if you do have freedom, then concentrations are inevitable. You hope that it's spread widely enough across jurisdictions and widely enough across individuals, corporations, et cetera, that is sufficiently decentralized. It's theoretically possible that it in any cryptocurrency can re-centralize, just if it has, 80% of holders or just one person or something like that. But again, going back to my earlier example of who's most likely to succeed cryptocurrency wise, who's most likely to achieve longevity, is what cryptocurrency is most likely to have a wide decentralized distribution. And the answer at the top of the list is Bitcoin, and by and far. So there's whenever there's a free society with free money, that free is in freedom, not free is in beer, as we say in open source, there's naturally going to be concentrations, and Wall Street can create and emphasize those concentrations. And you don't want it to be the state where Wall Street and, IBIT and a couple others lock up 80% of the circulating Bitcoin. Then, anyone can push around the currency if Jane Street gets bored and decides to, run up Bitcoin, and it's incredibly tight supply, and everyone agrees, then that kind of thing can occur, and that risk always exists. And so, it's a story of you always want freedom, but freedom requires vigilance as well. And you just let the tokens fall where they may after that.
This has been a great conversation, Jeff. I've loved learning from you and hearing some of these kind of war stories from the days of yore. We've got a lot of Bitcoin Treasury executives and insiders who are watching this. So, can you tell the audience, where they can follow your work and connect with you, and maybe learn more about Hemi and the services you provide?
Sure, easily go to hemi.xyz for a Bitcoin secured EVM experience. We're the only blockchain in the world that embeds a full Bitcoin node inside an Ethereum node to give full Bitcoin finality to all transactions. Hemi.xyz, or follow us, Hemi_XYZ on Twitter. Or I guess
Great
it's
stuff.
X now.
On X, yeah, I still call it Twitter all the time. But Jeff, like I said, this has been a pleasure. One thing I have all my guests say before they leave, and I think it's fitting today, is stay orange.
Stay orange.
Great stuff, ladies and gentlemen. Jeff Garzik.